My name is Phillip Pieper. I'm the co-founder and CEO of Swarm. Let's just jump right in. Does anyone know what this flag is? Has anyone seen this before? Looks a little English. It's the flag of the East Indies Company, the English East Indies Company. And it was founded in 1600. It had a good run of 150 years. And it was a copycat of the Dutch East Indies Company, actually 2 years later, that was founded in 1602, that actually sort of built one of the biggest trade organizations on the planet. They both actually did trade in the East Indies. They were sort of doing, spice trade. They did a lot of colonization in the area. But the remarkable thing here is that both these companies were very similar, but at the same time, they were distinctly different. So aside from being founded right around the right time, actually the East Indies Company of England was actually restricted to the circle of investors on a closed-end fund. And so they had 820,000 guilders, they had 219 subscribers, and you can compare that today with, comparing that to a collective investment fund. Now the difference to the Dutch East Indies Company was that actually it was open to all residents of Holland, and there was no upper limit. So the result was that there was 6.4 million guilders, and there was roughly 1,200 subscribers to the investment. And it was probably the first stock company in history, and in modern terms, this was the joint stock company that was founded in this case. Then it was actually traded on the Amsterdam Stock Exchange. So where usually there were commodities trade, pork bellies, etc., now suddenly there were papers traded. People were buying into a company, and for the first time there were prices being handled back and forth. Now, the learning and why this is relevant in our context is that there was a value that if you compare it peak adjusted, inflation adjusted to today's terms, the Dutch East India Company was $7.9 trillion. Apple is a very small portion in comparison to that. And the Mississippi Company was obviously another version of this. But if you put all the companies together today, from Apple, Alphabet, Microsoft, etc., it comes just close to what actually in 1637 the East Indies Company was in terms of value. The point is, if you have a novel financial concept, you can found, in this case, the most powerful company that was ever founded. It was a remarkable success that because giving people access and making it free to trade and creating something that was accessible became a really big success. So we at Swarm, we do securities, tokens, infrastructure. So we are an open infrastructure and very different from other players in the field. We are a nonprofit organization, so we are an open source project. We give our tools away so people can use them. And a year ago, we launched actually at the North American Bitcoin Conference, we launched the first alpha platform. And it's great to be back to actually update you with some numbers of what 2018 meant for us. We tokenized 7 funds. We focused first on actually tokenizing LP positions in funds for different go-to-market reasons. We did some equity tokens. Robinhood was one of them. So that was a really interesting exercise to actually be out there, actually doing also a novel concept that companies that disrupt the space themselves, like Robinhood, were somewhat interested that this was something that they didn't really know what to do with. We have an underlying technology infrastructure that is actually distributed. We have 181 masternodes that are staked. These masternodes are going to run services for the network, and I'm going to explain that in a second, how that's going to look like. And then we had 33,000 investors sign up. And these investors were qualified. Obviously, we're talking about securities, and we're talking about qualified investors that are the only ones that can receive securities. And this was in 89 countries, which is a massive global phenomenon. This is not just one country. So there was another aspect that actually completely overwhelmed us, and we didn't actually, frankly, expect this to be as big as it was. Actually, the global issuer demand was that we had 82 companies or projects that wanted to tokenize. And for us as an organization, that was absolutely not feasible to actually go through this, have a curation, go to due diligence, and do this. And this was actually from probably 1/3 was real estate, pre-IPO companies, there were sports teams, there was impact investing, and then there's gaming companies, and there's crypto funds as well. So if you actually accumulate all together, there was $1.2 billion in target capital that these companies were targeting to raise. We had to rethink things at this point in time. So we couldn't go serially through one step after the other and say, okay, we're going to do this the same shape and form as we did the early innings. So we put our thinking caps on, and we constructed this project called the ART token. And this was actually released in November. And let's take a quick look actually how that looks like.
Several of the world's largest and oldest financial institutions had fallen, either bankrupt, bought, or bailed out.
There is a new technological institution that will fundamentally change how we exchange value, and it's called the blockchain.
Bitcoin, fastest growing assets in all of history.
The next generation of the internet.
It has been a wild ride.
A peer-to-peer network.
This has never been done before and could provide near limitless potential.
Transparent, democratic, decentralized, and secure.
Stable asset class with appreciation.
What we've seen is a huge growth.
Investing in art, a global phenomenon.
Alternative asset class, hedge against inflation, returns.
Art returns beat the total return of the S&P 500. Average annual return of 10% over the past 4 decades.
Photography proves itself as a medium for investments.
Last year alone, auction sales of art photography rose 54%, and that number is said to keep going.
Photography as an asset class has pretty well beat everything in appreciation.
This is a whole new world.
A massive growth of people looking at investing in art.
Demand for the best in fine art exceeds supply.
So the interesting piece here was that actually when we released this in November, we were curious actually how we could construct this so that actually there's a first real impact for security tokens and demonstrating that there's a way to actually produce actually enough capital for people to be excited about it. This raised within 8 weeks $16 million, and in a market that normally was not actually sort of amenable to any investment. And there was 3 reasons why we think we did things here differently that were actually working out. The first one was it was easy to communicate. It was a very incredibly easy to understand asset class. You didn't need a lot of explanation to understand what you're investing into. There were some specific aspects about the asset class that made it really attractive too. So especially when you look at actually sort of photography, it has additions, so there's enough data points about liquidity there, and sort of if you want to redeem something, you can actually do that at a fairly transparent price. The redemption process was something that we pushed the syndicate leaders to have a trust layer. You could walk up with this token to the storage facility in Zurich and get the art out. And by committing to that, obviously it meant a huge deal to investors to say, if things go sideways, if we don't trust the people that are involved, there's still some way to recuperate the security of what I have underneath it. And the third thing was that we partnered up with Mercury FX to introduce fiat gateways. So initially, a year ago, we were predominantly, targeting crypto investors that they, invest into asset classes that are sort of, risk decorrelated. But actually, it turns out that, the normal retail investor is also not the driver. It's actually institutional investors that have a certain way how they want to invest, and most is actually coming through fiat. So at this point in time, we can take in 30 different currencies, from Europe to Hong Kong to South Africa. And that was a huge deal to say, this is money coming in a shape and form into the system that previously couldn't be done this way. So we are announcing today that security tokenization is going to be for free. And we believe that that the tokenization itself is not the value add. We believe that the tokenization itself is a technology that people should have access to, and you can replicate that fairly easy. It's a free issuance. People can go and they can play around with the system. I'll explain that the system is going to be as easy configurable as possible. So you can use templates, but you can configure yourself. But then there's a staking for the assets that you're raising funds on. So that's going to be as much as 0.3 to 1% of the assets under administration. But that stake actually returns also rewards. So what you create here is a vested group of people that have their stake in the system and therefore have an interest that this infrastructure also comes to fruition. The second thing that we're announcing is that we're going to become blockchain agnostic. We started off by forking Stellar and building our own blockchain, and we did that because we knew that we had a much more controlled way to iterate on these processes that are fairly complicated. And by doing a system that actually connects with all the different things that need to be decided. So when you send something from sender to receiver, there's a set of transfer rules that you have to go through. There's a set of not just is someone qualified or not, but there's different rules that you have to sort of manage, meaning there might be 99 investor rules. There might be sort of a certain maximum number of investors in a certain region that you want to do, because otherwise you're classified differently. But this core system is going to connect ultimately in roughly February timeframe to Ethereum, and then subsequently it's going to go to other chains as well. So in a way, you can then you can actually manage one security token, not just on one chain, but you can do it also across chains. So we're enabling the token issuer to actually take their tokens to where the liquidity is and not be limited by a technology decision. And the third announcement that we're making is that we constructed something called the Market Access Protocol, which is also an open marketplace to exchange AML and KYC information. So this is an open and connected infrastructure. And at the core of it, it's not just the hot dog, not hot dog, so investor qualified, investor not qualified investor decision, but there's much more complexity when it comes to actually sort of the nuances of who qualifies how, what is the information logistics that are connected with it, how as an issuer, how can I get access to the information that other people have qualified investors on. So in the core of, in a simplistic form, how it works is that the issuer actually sort of has a token framework that is part of a marketplace that has qualified investors, and that is being actively managed by the issuer. It's not just the token generation event, but it's also the event of managing subsequently decisions, compliance decisions. What is it that I as a token issuer am fine with exposing my traded security on? And that connects with investor qualification pools. So there's a bunch of exchanges, projects, but also professional organizations that do investor qualification. They can now bring an abstraction layer of their AML and KYC information in this graph, and they can participate, or they can open that up for issuers to match their security tokens against. And what that leads to is that actually the issuers don't need to requalify the investors all the time, but they can actually work off of other people's work that people have done. Now, the other side of it is that the exchanges, the security token exchanges, are key, that they don't have to do the same thing all over again too. So an exchange can actually then say, I'm going to query this graph and say, well, which wallet is qualified to trade this security token? And as a result of it, they have a regulatory off-burdening of saying, okay, well, the token issuer has permitted this one qualified investor to trade on the token, therefore I actually can make that trade happen. This is an interesting way for people to have a very lean experience. We're going to get to the point where, and this is not controlled by us, we're just the platform that is opening this up to anyone who wants to actually work with us on it. So we basically have different aspects of it. One is actually sort of on the right side, you see different qualification providers. We're working with BlockPass, Identity Mind, and Glyph already. There's a number of others that are in the works. On the other side, you can imagine that sort of the security token frameworks want to maybe take a stab actually working with this data oracle. And then there's obviously the exchanges in itself that do the same thing. And we have a number of security token advisors that are now sort of being trained on this, who we have high hopes actually that's going to scale this effort quite significantly. So we encourage everyone to stop by the booth. We are happy to sort of bring this to life with partners together. And if you want to reach us, swarm.fund or at Twitter, theswarm.fund as a handle. Thank you.